Good morning and welcome to Join the Dots. Well, as I've said many times during these presentations over the last 3 months, jobs, 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 no jobs. Jobs are going to go worldwide, and I am talking tens of millions, if not in the end, maybe 100 million plus. And I think we have to be ready for this. And it just fits in with all the macro that I've given you, all those dots that I've tried to join for you in terms of what's going on in the macro world and what's going to affect your world and our world. So today I'm going to start with Charlie Munger. Yeah, now I've talked many times about gearing, haven't I, and leverage and how gambling, I call it gambling, okay, because you can't time something. So therefore, if you can't time it, you're taking a risk. And if you're taking a risk, you're gambling, you're not investing, because you can't manage the risk. So I saw this quote from Charlie Munger and I thought it was beautiful. He said, "Smart men go broke from ladies, liquor and leverage." Old-fashioned quote, one you wouldn't get away with in today's world, but then Charlie's left us, God bless him, so no problem. So there we go, ladies, liquor and leverage. Okay, don't try and gamble with timing. It's not worth it. It's the way a lot of people go broke. Second quickfire story, BIS. Oh, here's beautiful, isn't it? Now remember, the BIS are the people that I first heard many months ago now. Many months ago, last November I think it was. So that's almost a year. That had $150,000 a coin figure on XRP to work its magic through the global system. That's what I heard. Okay. Now the BIS are now telling the world that subprime-style systemic ratings fraud. Yes. Yes. And that's what we're getting, aren't we? Autos, private credit, private equity. We are going to see ratings fraud exposed, just like we did in 08, just like we did subprime. Okay, how can you rate something higher just because you've got lots of it than you rate it individually? And this is what happens. You see, banks, they're quite happy to lend to a consolidator of garbage. So you have garbage, subprime auto loans, like subprime house loans in 08 or 07, 08, all right? You have garbage. So you scoop up all this garbage and you put it into one entity, First Brands, not First Brands actually, more like Primavend, and the other one, Tricolour. You pick up all this subprime, each one individually crap, you put it all together and then you say AAA. No, it's just a lot of crap. End of. So why do ratings agencies do this? Well, they get paid by the person who they rate. Did you know that? They get paid by the company they rate. They don't get paid by the government to do an impartial job. So if they're going to rate a company, guess what they're going to rate them? If it's the company that pays them. Not difficult. So the BIS tells we are on the verge of a subprime style systemic ratings problem. How much do they get paid, these people at the BIS? Unbelievable. Now, just to show you how this is working through the system already, Amundi. Amundi is the largest asset manager in Europe. And again, what do you see from that? Largest asset manager. So a conglomeration of loads of bits of asset managers all put together. Sexy name, Amundi. And they think they're great. Well, Unicredit, the largest Italian bank, is now pulling all its funds out of Amundi. Well, hold on. Amundi has 2.7 trillion of assets under management. Unicredit has 200 million there. They're pulling it. What's that? A 13th, 7%, 8%. 8% of their assets. How do they liquidate those assets to allow Unicredit to take its 200 million? How do they do it? They have to sell them. Oh, or attract new funding. Oh, good luck with that. Good luck with attracting new funding into private credit and private equity in a conglomerate of rubbish. Just the way it is. Just the way it is in any boom. In any boom. at the end of the boom, just like Ed Dowd said, just like Michael Howell said. We're at the end of the financial boom. And so you're going to see cracks appearing everywhere, and that's what's happening. Unicredit, to their credit, are a little bit ahead of the times. They've gone for it straight away. We want our 200 million back, please. They won't get it. They won't get it. We're too far into the recession now. Let me just liven up my phone because I've got a Greg piece here. But before that, the intro into the Greg piece is Eurodollar University again. So first of all, I'm going to link that BIS remark about subprime-style systemic ratings fraud. Okay, I'll link that. The second link I'll give you is Eurodollar University talking about jobs, 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 no jobs, no jobs, less jobs, less jobs, no jobs, no jobs. Okay, and they are talking about, and I've seen the reports on this, Amazon. And one of you picked up on I said Amazon were going to cut 30,000, and that was a Reuters report from internal documents. Amazon actually announced 14,000, but the documents still say up to 30,000. So 14,000 is for the PR department to work with, 30,000 is the truth. Oh, there's that word, truth. Truth over narrative. Amazon 14,000 is narrative, Amazon 30,000 is truth, okay? UPS, now what did I tell you about FedEx? When a company like FedEx or UPS, when they lay off people, it is telling you that the economy needs less goods transported. And if it needs less goods transported, the economy is slowing down. I don't care what the data says. I really don't give a damn on the data because it's not the truth. It is narrative. Okay? So Amazon 30,000 jobs, UPS 34,000 jobs in operations. So the actual people doing the work, 34,000 jobs to go. Management, 14,000 jobs to go in UPS management. 14,000. Okay, Meta, even in their AI department, are laying off. I haven't got numbers. Won't be huge, but it's systemic, isn't it? Or it's symptomatic of what we're facing. Even Meta in their AI department are laying off. The AI boom is the absolute epitome of this financially led mega boom beyond all previous mega booms. It's going to go bang, not pop. It's way beyond pop. It's more like a nuclear explosion. Okay, Nestle. Oh, chocolate. Wowee, what's not to love? 16,000 jobs to go worldwide, and they're pulling out of Africa totally. When you see massive corporations, global corporations like Nestle, abandoning a whole continent, you know something is seriously wrong. Because there's always money to be made at ground level in a continent as big as Africa. Won't be as much as in Europe, and it won't be as much as in the US, but there will be money to be made because the cost structure is a lot less, but they're pulling out of Africa totally. Okay, Nestle, think about it. So what we've got is exactly what I've been saying to you for 3 months. We're going to lose tens, if not up to 100 million plus jobs across the world. Okay, we are. And so when jobs go, there's lots of consequences. All right. So I'll link Eurodollar University. And now let's go on to Greg. Now I can't link Greg because, as you know, it's behind a paywall. But let me read you through his one on jobs. Waves of layoffs are about to hit, but there are things you can do about it. And this is a very proactive piece from Greg because, again, he wants to help his people. He doesn't just want to tell them what the facts are and then leave them to struggle. He wants to try and help them, and he does this all the time. That's why he gives trading tips to people who want to trade. People who don't want to trade, fine. People who do want to trade, he gives good trading tips to. The current set of economic dynamics in play are screaming that massive US service sector and retail layoffs are dead ahead. Well, we've heard quite a few already, haven't we? But that's just the tip. That's the tip. Here's the straight read and the chain reaction to expect and what you can do about it. Let's start with this. Why retail and services will crack first. What I've written just below is what already is happening. There is no waiting for it to occur. Don't think this is coming in 3 months, 6 months. This is happening now. This is happening now, as you can see from UPS, from Amazon, from Nestle. Okay, real wages are negative. Now, I've talked about this so many times with you, haven't I? I've talked about the inequality. I've talked about the fact that inflation, okay, hurts the poorest the most, because inflation hits food, fuel, housing, the three ingredients that everyone needs. Now, you may hear a bit of rain in the background. We hope it doesn't get too loud. Okay, right, real wages are negative, so people have less money to spend. If they have less money to spend, they can't pay for the car, auto loans. They can't pay for the house, mortgage loans. They can't pay for food, in some cases, Nestle. It's not, you just join the dots. Just join the dots. Okay? Real wages are negative. People's wages are way lagging the rising inflation, even by their own numbers. And after essentials like rent and food, discretionary spending gets cut. People buy less. Less FedEx, less UPS. Things like apparel, electronics, dining, etc. This bleeds off to shrinking traffic for business and services. Margins then get squeezed, and the result is layoffs, job losses. These issues become exacerbated by those living on credit. Yes, if you've got credit, you've got no room, have you? You're maxed out. You can't extend your spend. Okay? Rising delinquencies means fewer approved transactions, and this bleeds off to business closures. Then there is automation pressure. And I was going to tell you a story here, but the rain may stop me. Self-checkouts. Don't use them. I was at Heathrow many years ago now, 5-6 years ago, and Emirates wanted me to check in myself. And I said, no. Luckily, I had a very big Indian guy behind me who said the same thing, and we ended up with a queue of us saying, no. And suddenly 3 ladies came out the back room and started checking us in. No, don't allow them to save money charging you more money for your flight. What's that all about? Okay, so no, don't do it. Just insist, no, I want someone to serve me. This is a service industry. Don't allow them to do it. Greg even suggests, he says he queues at the till. He doesn't go to the self-service checkout. He queues at the till, even if it takes longer, so what? You have to push back, not just accept. Okay, moving on. How the layoffs, job losses, waves will hit. Hours cut first, fewer shifts. Hiring freezes. This is happening now everywhere, hiring freezes, with both small and large businesses. Store closures. There are loads of store groups closing in the US, some that have been there 100 years plus. I'm not going to give you the list. You just look it up. Just put US store bankruptcies into Google and it will spew a list for you. Okay? Store closures have been on the rise throughout the US in 25. Even several well-known large retailers have closed multiple locations this year and announced downsizing plans for the future. Okay, now this is great because I love Greg, the way he sees what's coming at you. Expect propaganda headlines pushing a strong economy narrative, not truth. When you see narrative, you know you haven't got the truth. We're learning that, aren't we? You either get truth or narrative. I bring you the truth. The press, the media, the newspapers, the television brings you the narrative. Just the difference. Okay. They will say earnings beats for the multinational corporations. Well, of course they will. And they will keep laying off staff to achieve earnings beats. Because they can. They can make the other staff work harder. Because what's the choice? Just the way it happens. But for the real economy, US small businesses and services expect a rapidly deteriorating situation. Bottom line, retail and services are next in the line of fire. Expect the media and the politicians to cheerlead with soft landing, sound bites, strong economy, propaganda. Based on what? A stock market. Based on what? Amount of money chasing a dream of AI. Mega 7. Okay? Mega 7. The other companies, stick them in a basket. They're at 22 levels. Okay? The Mega 7. That's all that's supporting this. Ratherlike.com. Okay, so in the real world, hours and jobs will be cut. There you go. Greg comes on to some suggestions there as to what to do and how to make yourself more valuable in the corporation and really start to, offer, I'll do this, I'll do that, I'll do more of it, because that's protecting your job. And you need to do that because this is a macro development. It's not a micro development. It's not an individual company development. This is an industry. This is an economy-wide development. Jobs, 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 jobs. Okay? So, I hope you understand that. I can't link Greg's piece because it's behind the paywall, but you have got the Eurodollar University, which talks about it, and Jeff does a good job on that. I will repeat one thing, though, about Jeff. Every time I see Jeff's program, he talks about monetary metals and this idea that you buy gold and then you lease it. I don't like that idea. I do not like that idea of having gold and then leasing it to a third party. You do not know who the third party is, so you can't be sure you'll get the money back or gold back. Anyway, the rain's coming, I better go. Thank you very much for watching Join the Dots.